Okay. Okay, I'll walk you through the sentiment analysis aspect first. All right. I'll skip through fundamental. Later, JT will share more with you. But basically, this week itself, the focus will be on Kiwi, right? RBNZ, and then on Friday, that's on Thursday morning, and then on Friday we have the focus will be on dollar. Right, this one I'll leave to JT to share with you a little bit more about fundamental and some of the key events in terms of the news events to focus on for this week. All right, but I'll bring you through to sentiment analysis first. All right, so this one COT, quickly you can see, all right, euro and pound is still in the negative territory. All right, what it means is that most of the traders, the non-commercial traders, all right, are still holding on to short positions. Okay, so you want to be together with them. So this gives you a quick glance as to, right now, as of this week itself, the short positions for euro and pound is still very strong. Right, and if you look at franc and New Zealand, they are basically almost insignificant because they're very small. They are close to zero. Okay, so what it means over here is that net position. That means if you compare the buyers and the sellers, they are almost in terms of equal positions. All right, that's why it's almost close to zero in terms of their net. Okay, so what it means to you is that there's no clear sign as to whether more traders are actually buying or more traders are selling. Okay, so in these kind of cases, best is to just be taking a neutral stance. All right, that means you do not have a clear bias in terms of sentiment as well. So just take a neutral stance. All right, Japanese yen. Later JT will share with you a little bit more for this week focus as well. But in terms of sentiment, let me share with you first. All right, we do see an increase in long position, right, or over in the Japanese yen futures itself. This simply tell you that people are still buying into Japanese yen. Right, pretty interesting, right? And this buy why are traders still buying into Japanese yen even though the fundamental is weak? Is because last week itself Abe itself, the stimulus package didn't deliver as to expectation, right? So people are now still buying into Japanese yen. All right, Aussie itself, you can see not much change from previous week, but the overall position in terms of sentiment is still positive. All right, even though after the rate cut, nothing has changed much. All right, it's still positive in a positive territory. All right, this is because of risk on environment, and traders are still looking out to put their money into higher yield currencies like Aussie and Kiwi itself. Okay, Canadian has a slight drop in COT in the net position. All right, this is mainly due to the fundamental data is also starting to show certain sign of weakness, as well as the drop in oil prices. All right, so over at Canadian, we are slightly bearish. Personally, I'm slightly bearish on Canadian because of oil prices, as well as last week data from CAT. Canadian is pretty bad. Okay, but if you focus on each of this currency itself, and you look at the long week to week changes and the short week to week changes, you can see that euro is still pretty bearish, right? But in terms of long position changes and short position changes, we do see some positions exiting from the euro contracts. All right, so this is telling you that people are exiting from the euro itself, right? But not very significant. All right, so nothing to be concerned of as of this moment. And if you look at pound, all right, pound is interesting because they are starting to see people adding on to long position. All right, but there are still people adding on to short, but short overcome the long. Right, that means more people are adding to their short position than their long. But thing to take note is their COT index for pound currently is zero. Okay, so what this means is actually this current position, this net position of negative 82,000. Right, it's actually the lowest net position in the past 3 years, right? So that's why COT index is actually zero. Okay, but if you couple this with fundamental, there's not much of a concern, right? Because fundamentally it's still pretty clear cut that pound will be towards the downside. All right, so we are still bearish on pound. All right, franc itself, interesting is because from positive net position it has changed towards negative. All right, Nothing much of a concern, all right, because these numbers are really, really small. Okay, so that's why you see overall in this chart, in this graph itself, it's almost like zero, right? So nothing much of a concern for Frank. Japanese yen is the interesting one, right? You can see short week to week is a negative change, all right, meaning people are exiting from their short position, all right, and there's an increase in a long position. People are adding into their long position, right? So meaning people are exiting from short and adding to long. Sentiment wise, we are bullish on yen. All right, so this is just purely on the sentiment aspect. And if you look at Aussie, all right, we do have not much of a change, all right, because we do have people coming in long position as well as short position. So nothing much to focus on Aussie. Kiwi wise, again, you look at this graph, it's almost like zero. There's no change as well. This is because mainly because of RBNZ this week, all right. So people, traders are actually not adding or adding into position or even making any changes, right? So we'll be at the sideline until the RBNZ made a decision this Thursday itself. All right, Canadian. Why I'm personally bearish on it, because if you look at sentiment, all right, long positions, there are about 2,000 contracts exiting, and there are people adding into short positions. All right, so overall, okay, it's a bearish sentiment for CAD itself. All right, so purely based on sentiment, there are some things that you can really trade off. You can really focus on the strength of Japanese yen, right? From last week to this week changes, the strength of Japanese yen, the continued sustainability in terms of the strength of Aussie because of risk-on environment, as well as the weakness of Canadian because of oil prices, as well as last Friday, pretty weak Canadian data, right? Pound and Euro, they're still weak in terms of sentiment is still bearish. All right, so these are the few key focus from sentiment aspect. Let me jump over to the chart itself. Okay, so I think John and Jess, you went through the Saturday advanced technical workshop. All right, so during then we also share a little bit in terms of some of the setups already. All right, but let me just walk you through some interesting one. All right, Euro dollar, we have a bearish setup, divergence setup, bearish divergence setting up. All right, price makes a higher high over here, but RSI shows a lower high. Okay, we have a divergence. Price has broken the neckline, and if you draw in your fib, right, with a 61.8 over here, you can see that this level has a very nice structure in the past over here, and the neckline in the past over here, price rejected as well, and then here it was the past support, right? So if price comes up towards this level, which is the 1.116, we'll be looking to short this position, right? Short this currency. And again, JT will share with you the fundamental of euro and dollar. Basically, we are bearish on euro, we are bullish or slightly bullish on dollar itself. Okay, so this trade technical wise is aligned with it. Okay, pound dollar, there's no setup as of now in terms of technical. Okay, so we just wait patiently. Dollar, you this one, we have a setup over here. Okay, dollar yen is actually a structure trade. All right, if you look at this on a H4 time frame, okay, we have a lower high over here, as well as a lower low being formed. Right, so you have 1 point, 2 point, 3 point, and 4 point. So once you have this established, we just pull in our Fibonacci, we wait for a retracement back to our previous structure over here. All right, and this structure nicely confluence with a 61.8 Fibonacci. And if you look further left, you have some structure over here. Right, so not too bad a level to actually look for a short opportunity. All right, this one you need to be cautious, because if you're shorting dollar yen, you're selling US dollar and buying Japanese yen. All right, you want to be aware whether you want to short dollar as of now because of last week strong data. Okay, but if you look at higher time frame, overall the technical trend is still downwards. All right, so it's not too bad a setup. All right, you just want to focus on Friday dollar data coming in. If it's positive, you might want to protect yourself, either if it's already trigger, you want to shift your stop loss to break even and protect your capital. Or if haven't trigger, you might want to monitor closely Friday data itself. All right, Aussie, nothing much that's setting up. But if you go to a higher time frame, on the daily time frame, right, you are looking over here, you have a very strong resistance. All right, tested one time, two time. Now it's testing again for the third time. All right, and for those who are trading purely technical, you can see that this is actually a ascending triangle. Okay, so if it breaks the upside, high chance it's continue going to higher. If it breaks to the downside, it will go lower. But as of now, what is happening is called a consolidation, right? But we don't trade all this pattern. That's why we don't really share all the setups with you, all right? Just to share with you technical wise, there are many strategies that you can do. But the important thing is stick to your plan, all right? Focus on a few key strategies, and that's more than enough for you to trade. All right. I think this one is also in our trade signals. New Zealand dollar. All right. We are looking for a sell, a bearish butterfly. Right. So for those for Jess and John, right, since you attended Saturday, it would be good for you to also practice a little bit on your own to see if you can identify all these setups that I shared with you. Okay, because you need to take practice before you can be familiar and eventually do this yourself as well. All right, so this butterfly pattern is a bearish one. If you look at where current price is to the level which we want to enter, is about 300 pips. All right, so it's pretty far. Unlikely it will happen this week. All right, and again, what we have on Thursday is RBNZ, so you want to keep an eye on this happening as well. Okay, dollar CAD. This is a cipher pattern. Okay, again, go and practice and see if you can identify this cipher pattern. Okay, on a daily time frame is pretty interesting because this completion of a cipher pattern comes in at a very nice support level. All right, over here tested one time, two time, here as well, three times. All right, and what dollar CAD is doing right now here is consolidating on the daily time frame. All right, so if it drops over here, which highly unlikely it will drop because of Canadian weakness and dollar bullishness, high chance is going to just continue higher. So this setup, the chance of it completing is not very high. All right. For if you are sharp enough, there's actually another setup that's coming out. Let me just show it to you. Right, if you focus on this, right, this swing X to A to B to C, and then now it's starting to show that it's coming down because of B point retracement at the 61.8. Okay, it's a potential Gartley pattern. All right, so Gartley, how I trade it is I use this extension to find 127. Okay, my 127 is over here. Okay, so how it looks like if I draw in the entire pattern. Okay, it's in this shape. All right, give me a moment. Hello, hello. 开始了，你直接加进去啊，等我 pass 给你拜。Okay, so let me just wrap this up, and then JT is setting up to share with you a little bit of fundamental. All right, so just now I shared with you a dollar CAD. There's a cipher pattern. All right, over here we have also a smaller bullish Gartley pattern. All right, and if you go back to higher time frame, you can see that this level that we are looking to enter is not too bad structure wise as well. All right, we do have some bounces, some structural resistance support over here as well. All right, so these are very technical trades. The thing is you want to align it together with fundamental and sentiment. So in this case, right, this buying of dollar CAD is actually aligned with fundamental as well as sentiment. Okay, so when all these things align, right, basically you have extra confidence and conviction to just take trades like this. All right, so let me just check if JT is ready. Okay, he hasn't joined in yet. Let's give him a moment, and then I'll pass the screen to him, and then for him to share with you more on the fundamental aspect first. All right. Any questions from John and Jess? Nope. Okay. Will you guys be free on 12th of August for the meetup? Okay, cool. Okay, let's give JT some time. I'll minimize this. Okay. Okay, if you guys look at this week events calendar, right? There's actually nothing much for you to focus on other than on Thursday morning, right? That's where your RBNZ comes in, and then on Friday itself is on the Euro is a little bit, all right, but it's not like super important data. But Friday itself, 8:30 p.m. is where your core retail sales and PPI. This is where the important data kicks in. All right. So this week itself, Monday, Tuesday, Wednesday will be pretty quiet. Meaning there's not much that's gonna happen. All right. Movement wise in the forex market shouldn't be huge. Most of the event will come in on Thursday and Friday itself. Okay, so that's the focus of this week. Let's give him some time to set up. Okay, it's taking some time. Let me just go through some of the charts. Is the okay? John, yes, the retail sales from US is important. Because what is tracking is what is the retail sales data, right? It's basically tracking the spending from consumers, right? So it's actually an inflation data, and it'll be pretty important for Fed because they are looking out for inflation to go back up to 2.0. All right, so a positive US retail sales data, right? So the expectation for this week, the estimates, right, coming in is at 0.2. Previous was 0.7. Okay, so they're expecting a drop in the US retail sales already. And this one also 0.6. This time around, they're expecting 0.4. Okay, so if let's say the actual one on Friday, right, comes out less than 0.2, and the retail sales itself comes out less than 0.4, right, we'll see more weakness in the US dollar itself. All right, so if let's say Friday 8:30, it comes in at 0 over here or 0.1, and then this one retail sales, it comes in at 0.2 or less than 0.4, you see high chance that the US dollar will be weakened. Okay, so all these things is where you need to be on the ball when the news is being released, so that you can protect yourself from certain trades as well. So if this is, let's say, if this is positive, then we might see dollar to continue strengthen. Okay, so it is important. Okay, PPI is also important because if you click onto it, right, PPI over here shows you the change in price of finished goods and services sold by producer. So this one is also again tracking in terms of inflation. Okay, so any data that is inflation in the US is going to be important for now because that's what the Fed is looking at. All right. So yes, to answer your question in short, it's going to be important. All right. Even this prelim consumer sentiment is going to be affecting the market a little bit. All right, because consumer sentiment, if it's positive, if it's high, right, meaning consumers outlook is positive. So when consumers outlook is positive, it's high chance that they're going to spend more, and that's going to spur up inflation. So if this comes in positive, it's going to help the US dollar as well. JT is taking quite a bit. Let me just go back to the chart and show you some, see if we have any setups that we can talk about. Okay, this is pretty interesting. Let me take a look at this. All right. Okay. Okay, if you're day trading, all right, normally day trading, you can go down to 15 minutes, all right. Okay, he'll be here. All right, but let me finish off this first. Normally, if you are doing day trading, you go down to 15 minutes, all right. So even in 15 minutes, you can employ those strategies that we shared. All right, so for example, over here is consolidating, all right, and if you measure your swing points, all right, like the one that I shared with you guys how to do it on Saturday, all right, you realize that we have a potential W pattern, right, and you put in your Fibonacci 2, it looks everything aligns, all right, 50% retracement, and then the completion is where we're looking at 88.6. Right, so we just simply wait for price to go higher, and then that's where we're gonna sell it if you are doing day trading. All right, so if this is the level, just go one higher time frame to check out. All right, not too bad in terms of structural level. All right, we have pretty nice resistance over here. Here is previous support, and then resistance as well. All right, not too bad for this trade. Okay, since JT is here, I'll pass it to him to share with you this week fundamental. Okay.
Hi guys. Alright, let's get started. For this week's live webinar, I'm going to talk about three currency pairs. But before we go into the three currency pairs, just want to have a recap of what happened last week. That gives us an idea of how to move forward for this coming week, right? So you know what happened last week. We just go back to work, like we can just have a quick overview of what happened. Pretty much, it was a very eventful week. We had a few trades that was very
JT.
Yep.
They can't hear you. You might need to unclick your microphone.
Sorry, yeah. Can you hear me now? Anybody hear me? let me know if please let me know via WhatsApp or via the chat box there if you cannot hear me, and I will respond to it. Okay? Sorry about that. So let me just go back. Before we start into the three currencies pair I want to talk about this week, I would like to recap what happened last week. Okay? Last week was a pretty eventful week where we had several trades that was closely related to the news that to the data release, especially on Tuesday, on Thursday, and on Friday. Okay, so altogether we had about 3 trades that we want to share last week. I will not show you the charts. I'll just be verbally explaining the trades. We had a pretty good trade on Thursday and Friday because we, number one, was bearish on pound. We shorted pound USD and it went according to the direction. BOE not only had a rate cut, they also had a larger than expected stimulus package. There was more than 130 billion per month, 130 billion stimulus package compared to what was expected. On Friday, the average hourly earnings per month, okay, month on month, actually came out way higher than it was expected at 0.2%. If you look at this data here, it was actually at 0.3, and not to mention, there was a huge jump in compared to expectation in terms of the NFP, the non-farm payroll. All these led to a pretty huge drop in the pound USD, which we had successfully shorted since a few weeks ago. So that was the move all the way here to here. Okay, so that was altogether a few hundred pips move. But all these are pretty good trades. What about a bad trade? We actually had a bad trade on Tuesday itself when RBA announced that the cash rate should be reduced from 1.75% to 1.5%. That's altogether a 25 basis point cut. However, despite having a rate cut, the Aussie dollar, instead of depreciating, instead of going down, weakening, it actually strengthened across the board. Okay, so there was something that was pretty unexpected, and because it went against our expectation, many things happened, including our SL. So we can all see that all these trades that was based on Aussie weakening actually went against us, including the Kiwi trades. So there were hits and there were misses, but as long as we had a system that we stick to, it actually at the end of the day will still make us a few $100 profit. If you were to stick to your system and don't second guess, don't doubt it, at the end of the day, in the long term, it will still be making money for you. Okay, so that was last week. And from last week, what we want to take note of is actually the strength of the US dollar or the US economy. Okay, before I proceed, I just want to bring back everybody to the fact that NFP and average earning per hours was extremely strong, and we'll be expecting to ride the strength for USD this week. Okay, moving on. So today, we are going to talk about 3 currencies. The first one is the Kiwi dollar, Japanese yen for a second, and the third we're still going to talk about the US dollar. Okay, so the 3 key currencies today is the Kiwi, the yen, and the USD. Right, so if there are any other currencies that you'd like to know more and you'd like to know what's our thought process and opinion about, please feel free to type inside the chat book, and then we will talk about it. If there is anything to talk about, I will definitely share our opinion on it. Right? So for this week, we actually had all these currency pairs. Again, from the SI point of view, this is all fundamentals, which means I do not take into account sentiments. I do not take into account what's going to happen in the future, or these figures are historical figures. So what do these economic indicators, these historical figures, tell me? Aussie economy is currently still weak, but despite that, we are actually looking at an expansion in last week, in the last 7 days. Kiwi is still green, which means it has been facing an expansion for the last 30 days and the last 90 days. But last week, there was a small little contraction. Canadian has been strong, and what we are looking here is actually a turn, which means from being strong, the strength did not go through, did not continue, and right now is facing a contraction. Okay, we're going to skip Chinese. And let's look at Japanese. Japanese economy is still weak. I've always been saying Japanese economy is weak, and it is still weak. But last week, we actually see a small little expansion there, but nothing compared to what it has been. Look at the past 30 days, it's been -7, and the past 90 days, it's been -11. All these point towards an overall contraction. The big picture tells us that it is still in a bad shape economy-wise. Okay, US, despite the good data last Friday, we are still looking at a small contraction for the last 7 days. But overall, the US economy is still expanding. Euro, overall, it is green, but over the last 1 month, we are seeing a contraction. And frankly speaking, I'm not surprised. Okay, if you look at pound, it is still undergoing a contraction for the last 30 days. Why? Brexit, obviously, and because there's a huge negative sentiment surrounding this Brexit. I would say that for Europe and pound fundamentals, they are all leaning towards the weak side. Okay, in terms of fundamentals and in terms of sentiments. All right, so this is the full picture for this week, and let's take a look closer at these three currencies. We have a directional bias here. For Kiwi, it is actually neutral to slightly bearish. Yen is bearish, and USD is bullish. For the next 10 to 15 minutes, I will be explaining to you why is it that this is our directional bias, and hopefully you will understand more of our thought process, something that you can apply also on your own trading. Of course, there are 7 major currencies here that we can talk about, but I'm just going to talk about these 3 so that you can focus more on how we think instead of what is the actual outlook for next week. Okay? So I'll proceed with Kiwi. The reason why I say it is neutral to slightly bearish. FSI, which is a fundamental strength index, shows us that the Kiwi dollar is still strong in terms of fundamentals. It has a good run of expansion, and we are actually looking at a strengthening Kiwi. If you look at chart 1, this is the chart 1, you know that since last year, 2015, right, there has been a huge down move for Kiwi, okay, all the way from 88 here to here, the bottom of 0.6. If you see this pin here, this whip down is actually on the 28th of August, or is it 29th of August 2015? It was a Monday. We all know that there was a flash crash then in Chinese market, and it actually went back up ever since. And if you realize, Kiwi has actually been strengthening since then. This is actually a weekly chart. All right. So this strength in Kiwi has actually been something that RBNZ has been talking about. Okay. On top of the improving Kiwi economy, the risk-on environment has been on a full swing since 2016. After the January Chinese second flash crash, and after the dip in February when S&P was 1,008, it went back on the full risk-on mode, and right now S&P is hitting an all-time high of 2,187. If I'm not wrong, let me just check the figure. Okay, S&P is all the way at 217. 2178, right? So all this is showing us that there is a full risk-on environment, and this actually also contributed to Kiwi strength. RBNZ's inflation target of 1 to 3% has been consistent, which means there has always been targeting inflation rate of 1 to 3%, but it was not met, not single big. Okay, viewers, the RBNZ's rate is under pressure. Okay. Following RBA's rate cut, RBNZ is pressured to follow suit. Okay, if we just go into Google and then we type in RBNZ, we key in the news, all here will just point you towards one thing, which is RBNZ looking to cut their rates, their official rate, cash rate overnight. All right. So if we just type in RBNZ, and we just go to the news site, you can see all these news all point towards one thing. Sentiment is telling us that all these traders, investors, and market makers are all looking to price in the RBNZ rate cut on Thursday. Now, what do this all mean to us? Why do I say that the Kiwi dollar is actually neutral to slightly bearish? If you look at this chart here, we are actually looking at an expansion of Kiwi. And I've also mentioned before, if this Kiwi here is in a green, I'm not actually looking to short. I'm only looking for opportunity long. For this time round, I'm actually looking to short Kiwi. Why is that? The reason is because the RBNZ has been pretty clear in the stand with regards to Kiwi strength. If Kiwi strengthens, it is actually bad for their export-driven economy, especially in the milk market, in the dairy product market, right? So they are a central bank that actually focuses a lot on the exchange rate stability, which is the strength and weakness of kiwi. Now, in terms of export, which one is better for the economy? A strong currency or a weak currency? Now, I can't hear you reply, but if you can just type your answer here, that would be great. If you don't know, the answer is actually weak. If they have a weak kiwi, that would be better for their export, especially in the dairy product. All right. So what are they actually looking to do? They are actually looking to depreciate kiwi in order to bolster their environment. It's not just about the low rates, right? It's not just about the low currency, the low official cash rate. It's also about weakening the kiwi dollar itself, so that the economy can benefit from the weak dollar and hence a stronger export. Okay. So this is also another part to show you that the risk-on mode was on full swing. It has been hitting an all-time low of 12.85 regards to fixed on August contract. I'm also currently trading this particular asset class here. But what I want to show you here is there's a full swing of risk-on mode. Now, given that there's a full swing of risk-on mode, what we can actually expect is to have a strengthening kiwi. None of these, of course, is what the central bank wants. So what do these point towards? It points towards the fact that RBNZ wants to cut rate, and there is also traders who actually priced in 100% rate cut for this particular Thursday, which means there is almost 100% chance that they're going to cut rate. Now, given that it is going to do, RBNZ is going to do that, our position here is to actually consider a shorting opportunity for the kiwi. But I will only do so, okay, because I want to manage my risk, I want to manage my downside. I will only do so with a stronger currency. Or I will have more information after RBNZ, whether to go long or to go short. Okay? Learning from last week's RBA's news event and RBA's trade, I might want to just stay off kiwi trades until at least at 5 a.m. on Thursday. After the entire thing has gone, after the entire thing has settled down and the dust has settled, I will only go in with enough information, whether they cut rate, whether the market reacted the way it should be, which is weakening kiwi. If it doesn't, I might just want to stay away. Okay? But as of now, some of our trades are actually shorting the kiwi because we are definitely expecting RBNZ to cut rates. Okay, so we will be entering at high time frame major resistance and support areas. One of the trades that I want to show all of you here is actually this one, right? So if you look at kiwi USD, I'll be explaining later why it is actually strengthening. I am actually looking to enter around this level. Okay, around this level here, which is a major resistance. It's not only a major resistance since last year, 2015, July. It is actually a major resistance since a long time ago, since 2014, right? So this is actually a support turn resistance, and we will see whether or not this particular resistance area hold. Meanwhile, if you are interested, you can actually put a short trade here, which is around 0.724, around this level. And if the price hits, you are actually getting a technical plus a fundamental play. All right? Okay. So if you have any questions with regards to kiwi, please feel free to message me and WhatsApp me. I will have all the messages that I can read and I can respond accordingly. All right? So that's for kiwi. And I'm going to talk about yen next. FSI shows us that the pound is hold on. Sorry, there's a typo. The yen is weak. FSI shows us that the yen is weak with further contraction. And to show you what I mean, let's take a look at this one. Sorry, not this one. To show you what I mean, yen has been, Japanese economy has been in contraction since last year. Before then, it was just a little bit expansion, but it went all the way down. You can see this arrow here that actually point towards a downtrend, okay, in terms of economy expansion and contraction. And right now, it is still contracting, which means not only it is bad, it is still going worse. Strong uncertainty in the market, removal of the yen QE, and the disappointment of BOJ has led to nothing but strengthening of Japanese yen. So despite weak fundamentals, we are still looking at pretty strong yen in the market. To show you what I mean, you can actually just look at the chart itself. All right, if you just take out kiwi and USD yen, you can see that this trend here has been nothing but downtrend. Okay, and this downtrend is a strong downtrend. so strong that we might not even see this level of 101 being held up. But who knows, right? So this is exactly what I'm going to talk about today, right? So yen has been weak fundamentally, but sentiments all point towards a bullish yen. In fact, if you read Kayong's report for this week for the sentiment, the COT report, they're actually looking at even more bulls adding into the Japanese yen, or if there's actually a reduction in the short of the yen currency, right? But all this actually, in my opinion, point towards opportunity for us to short the yen and to long the USD. I'll explain why. It's actually hitting a major support level of 114, and the downside of yen trade is actually continuing uncertainty, especially in August and September. With regards to just this chart look, I'm just going to use this chart to explain yen. It's actually hitting a major support level here, and this is a huge support waiting. There is a huge demand here in terms of the weekly chart, and I'm just putting a buy limit here to see if that price of 101.4 hits, and eventually it will rebound back to give me a few pips, perhaps until 106. So that's about 500 pips altogether. So what we are actually looking here is to long this particular pair when there is, number one, a major support, and number two, a huge fundamental reasoning behind, right? Which is a very weak Japanese economy. So there's one thing that I'm looking at Japan. I'm bearish on it, but of course the COT doesn't tell that. So it really is up to you as to how you want to perceive these very bearish fundamentals for Japan. Because frankly speaking, for Japan fundamentals, it doesn't quite clear in the market as much as we want to. Because well, Japanese has been strengthening over the past few months and weeks, even though the fundamental is showing us. But this here is an opportunity that we shouldn't, I wouldn't want to miss, because it is now hitting a major support. Right now we are in positions and we will be shorting this particular pair, or in terms of USD yen, I'll be longing that pair from major D1 time frame or H4 time frame in a support and not resistance support area. Okay. Now I'm going to move on to the USD, which is the US economy. We all know that the US has been recovering. Okay, it's not just through our FSI, it's also through the news, through the data released, that US economy is not as bad as many people. I mean, when I say many people, I might mean Morgan Stanley. Okay, they've been saying that US is actually very weak. The local demand for goods is actually very weak. Confidence is going down, but the data is not showing us that, right? The data is still showing us that the economy in the US is still going on strong. It was a slow but steady expansion. Okay, we do see that. We also see that the DXY has a strong rebound from last week, from 2 weeks in fact. Okay, if you look at DXY today, you should see it at around $96 level. Okay, $96 level. Will we see this continue going up? I'm not sure, right? I don't know. But the fact is, the dollar has been going on strong, and this DXY has also been showing us that there's a bit of strength there. We intend to ride on that strength for the next 1 week. So if there's any currency pairs that I would like to match together with a bullish one, let's say I have a bear currency, and I'll be looking for a huge, very proven, very sure, not say very sure, but a high probability directional bias. I'll be looking for a very bullish USD, and USD is our champion for this week. So let's say if I were to long USD, I have to short yen, I'll be going for USD yen. If I were to long or short Kiwi, I'll also be looking for USD, because I'm bearish on that particular pair. So Kiwi USD and USD yen. Right. So the downside for this bull USD trade is negative sentiment on the USD still shorts the USD currency. I'll be watching out for the PPI this Friday to make sure that none of these US bears can take advantage of that negative sentiment. And if the sentiment is still bad, there's still a lot of bad news that surrounds this particular currency, I will be looking to get out of my long USD trade, because risk management at the end of the day is still the most important thing. As long as there is misalignment between sentiment and fundamentals, I will get out no matter how strong the fundamentals are telling me to. Right? So for this week, I will not short USD, only looking for long opportunities. I'll be pairing it with strong bears in the market such as yen and probably Kiwi because of RBNZ, and that will give me a pretty good trade. Okay, so right now we are not only just looking at Kiwi USD at 0.721, we are also looking at Japanese yen at 101.4. So to show you the chart again, okay, we have one trade here which is at 101.4, looking to long USD yen. Okay, and we also have another chart here, the Kiwi USD. I'm also looking to trade this pair to short this one at 0.721. Okay, so I just want to show you guys towards this one. Right now, not only that our qualitative analysis are showing towards that, our FSI, which is a more objective way of qualifying our FSI, our fundamental analysis, is also pointing towards one thing. Number one, USD yen is way higher, which means this gives us a pretty good long opportunity, right? So this is a pretty good long trade. There's a lot of space here to for us to tap into, and the levels here, the ID actually shows us that the intrinsic value, the value of USD yen is at 107 level. Would I wait until 107 level? Maybe, but it'll be interesting to see how this actually plays out within the market itself. Okay, because once it goes up to that level, that actually could signify a reversal of trend from downtrend to an uptrend again. Okay, the second trade is of course the USD, Kiwi USD. We are also looking at. Oops, did I do something? Okay, we are also looking at Kiwi being much lower than it's supposed to be, which means the intrinsic value is actually lower than the current spot price. This also gives me confidence that I can be shorting this particular trade. And the level that it is actually showing is actually 0.7. From the major resistance level just now, I showed that it is actually 0.721. I actually can exploit about 200 pips here, which is not too bad, given that it is a major resistance level here. So I can get a pretty stable, pretty capped upside and hence a downside to that trade. Okay, Ken, so are there any questions with regards to these three particular currencies? Please let me know. If not, as per last week, I'll be sending you guys the presentation for today. Okay, I'll also be adding in this particular trade here. Long USD yen at 101.4. If you have no questions, thank you for listening, and I hope that you have any currencies that you want us to take a look or you want our opinion. Please feel free to just type inside the group chat, and I will spend some time and give you what I feel about that particular currency pairs. And of course, all these are actually part of our trades. Okay, what Kayong is doing is that he gives me all the trades in terms of harmonics, in terms of structure, in terms of divergence, and I'll be filtering some of these trades. For example, last week he actually gave me one of these trades. It's actually a long pound USD trade, completely valid. It is a harmonics trade, but I still feel that the pound has a lot of bear and the USD has a pretty strong bull with it, at least for that 1 week. So I actually decided to take away that trade just to protect our downside of the portfolio. Okay, Ken, so if you have any questions, please feel free to ask, and I'll be sending you this particular presentation today in terms of a PDF file. Okay, that'll be all for me. Thank you.
Okay. Any questions? All good. Okay. Okay, let me just take back the screen. JT, can you pass back the screen to me?
Yeah, how do I do that?
You click on my name, then assign as presenter.
Your name is Ang's Air4, is it?
Yeah. Never mind, I can self-assign. Okay.
Okay, thanks.
Okay, if there's no question, I'll just. Okay, let me just check my chat. Okay, all no question. John and Jess, no question for you guys. Okay, if you realize the technical that JT used and I use is slightly different now. Basically he's using this concept called supply and demand. All right. If you guys are interested, do let us know, and then we'll probably teach you a little bit about how to use those supply and demand. But basically, as I shared with you on Saturday, supply demand is the whole concept is very similar. It's actually structure, support, and resistance as such. So nothing too fanciful about that. Just go back to the basic. Keep things simple. The important thing about trading is actually your risk management and psychology. All right, let me just do this quickly. I think I want to learn. Okay, let me just do this. Uh, JT, you want to mute back your one? Yeah, unless you want to talk because got background. There's a background noise to it. Okay. Yep. Okay. So, John and Jess, what we'll do is I'll do a video recording. If later on today, tonight, right? If later on tonight I have some time to do video recording, I'll actually do it. If not, then I'll do it tomorrow. Anyway, tomorrow is holiday, so I do have the time to do it. I'll record a video, especially on supply and demand, and then I'll share with you. I'll record the video, publish it, and then after that, you guys watch it. If you have any other questions after watching that video, do let me know, and then we can move on from there. All right. But let me just quickly share with you some very interesting setup over here. Euro yen, very interesting. I like this setup pretty much because if you look on this technical H4, all right, and you look at combine it with sentiment fundamental, selling on euro is hardly you can go wrong, right? Selling on euro, and then if you're looking at yen, currently the sentiment is still strong. That's why if you couple this, selling on yen, euro yen is pretty a nice idea. And if I couple it with technical, all right, you look at this Fibonacci 50% retracement. Look left, you have structure, support resistance over here. And if I go further, even further, right, there was a previous resistance as well. All right, so this is a very nice setup. If price comes up towards the 114.7 level, all right, and what I want to play with this is we have also a bullish bat pattern. All right. So how I want to play with it is, I think for John, if you traded the BAM, all right, which is the break of the B point of this pattern, right? You will be also in profit. Okay, but as I shared with you guys, is we don't usually just trade based on the C leg of the pattern or even the break of the B leg. But if let's say we have another setup like this, all right, we have a 1, 2, 3, 4, and then we wait for the retracement back towards the 50% level, which is also your B point. All right, then we can look for a potential short, all right, until the completion of this pattern, which is over here. All right, 88.6, and then we look for this short. If price retrace back up towards this, is a structure trade. Okay, structure trade to short this setup, and then we will take profit at this completion of the bigger pattern. All right, and then over here we look for a long opportunity. All right, and we continue riding back up. All right, so this is where I shared with you on Saturday as well how we can combine various strategy into one holistic trading plan. All right, and we can definitely spot a lot of opportunities in this kind of trade. All right, so this is one that euro yen. I would want you to really pay close attention to this pair. All right, and keep an eye how this will evolve as of this week itself. All right, another thing I want to share with you is if you look at this, all right, this is euro yen, right? If you look at Aussie yen, it's very similar setup. All right, and this one I think I shared with you both of you as well regarding risk exposure, all right, trade management. When you are trading yen pairs, most of the yen price movement is very similar. So you need to be very cautious and aware of if you take a short in, let's say we short euro yen over here, all right, and then you short Aussie yen over here, you're actually exposing yourself in two positions on yen trade. So you need to be very clear and aware of it. All right, and if you look at this, this is a very similar kind of play. All right, we have a bad pattern, as well as a structural play going down into a bad pattern. All right, and again, but you need to also consider not only on technical wise, but if you look at fundamental, Aussie just cut rate. But then again, JT just shared with you that prices of Aussie are still rallying. So this one you might want to be cautious. But we are personally taking this trade. All right, we are personally selling the Aussie yen. It's very close to our entry point. Is at our EP is at 78.4. Current price is at 78.2. So that's about 20 pips away from it. All right. So high chance is that it'll be triggering our trade by tonight, or if not tomorrow morning itself. All right. Let me just see if there's some other interesting one to share with you. Right. There's not much left. Okay, oil is another interesting one. I think this one we shared on Saturday. All right. It's interesting because we are playing on structure trades. All right. You can see this level. On daily is not too bad. All right. Tested a lot of times over here, but H4 is a very nice level because it tested 1, 2, 3, 4, and then eventually break. Right. So if it comes back up towards this level at 44.47, it'll be an interesting level to look for short opportunities. All right, so if you're trading commodities, oil is one that you want to take note of. All right, other than that, any other questions? Okay, nice, John. This is exactly what I plan to do on Euro Yen. All right, great. I think it'd be really interesting. All right, since you are also monitoring that. All right, keep us posted as to how your trades plan out for you as well on Euro Yen. Let me just quickly go over to the other portfolio. Just give it some time. It's not responding right now. Shucks. Just reopen it. Okay, since we are waiting for my com, I think it's pretty slow because a lot of software is running. Just to cautious you guys again, right? There's nothing wrong to learn a lot of concepts in trading as well as technical analysis in trading. For example, you already have 3 tools and 3 strategies in your arsenal. Learning a new one like supply and demand, all right, you'll be adding on to a 4th one. Just be aware that you do not get this thing called analysis paralysis. That means you have so many strategies that when you look at the chart, you do not know what to use, which one to use, and then sometimes when you get conflicting signals, how do you deal with it? So you need to be very aware as to when you face with all these things, how are you going to deal with it? Okay, so that's where your trading plan is very important. And I already got you guys to write your trading plan. I'm not sure how well you're following that plan, right? But we'll do a post, as in kind of like follow up with you guys end of this month as well, right? To see how you guys perform for since we actually started teaching you guys, right? So from there we can actually do a report and then see what are some of the rooms of improvement that you guys can work on as well. Right, I think my chart is very slow. Okay, I'm not sure what's happening. Any questions or any pairs that you want me to walk you through? All right, if not, right, I want you, okay, no, very good. If not, what I want you to do is today, not today, but this week itself, if you look at this, right, we have a lot of signals, all right? The reason here is because for this week itself, all this technical analysis are purely on technical, meaning I did not filter it based on fundamental, didn't filter it based on sentiment. But why I put all this in is I want you guys to go and practice doing it. All right, since this week focus is on practicing technical analysis. take a look at all these pairs that I have listed out. Okay, go over to the chart and see if you can find all this setup. All right. Instead of looking at the entry price straight away, look at the pair itself. Figure out if you can find the setup that I stated here. Okay, take this as a practice, take it as an assignment. And if you cannot find or you find difficulties doing it, all right, do let us know so we can help you out as well. Okay, I think John wouldn't have problems in his technical analysis. He's pretty good at that. I think it's more of just do practice on it so that you get the hang of it and then you improve as we go along as well. Okay, my chart is not loading up. Can you go through Germany? Jess, you mean German DAX? Okay, cool. Okay, this is not loading. I'll just open up another account that I just in case my MT4 is not loading, I'll just show you on TradingView. My com is running a little bit of software and then my MT4 is not working. Let me do that charting on TradingView to show you so that you know I'll solve that later on. Okay. Okay. It's not loading. Okay, I think it loaded. Let me see if I. Okay, never mind. I'll just use TradingView. I think my parallel desktop is very slow. Shut it down. Okay, let me go to German DAX. Okay, so okay, we are on this path, right? So let me go over to the H1 time frame to walk you through. Okay, let's take a look at H4 and what's happening right now. All right, you can see that technical wise, right, what's happening is it is going up, all right? So it is currently H4 wise is an uptrend, right? In the signals or the setups that we share with you is actually on H1. We have a bearish bad pattern, right? But you can see that price open up over here. Let me just draw in the bad pattern for you. All right, is over here. E and the 886. All right, you can see that today when the Europeans market opened, all right, this German DAX actually this index actually gap up, right, straight away hit the completion of a bad pattern. All right, a bad pattern, it looks like this. Okay, it hits that and then after that it rally back higher. All right, if I take a look at our stops that we send it to you, it'll be at 113. It's not this one. Just key in. Okay, our stops will be over here. Okay, so our stops will be 113, entry at 886. All right, so you can see that when price gap up, all right, usually when you're trading index or when you're trading stocks, there are a lot of all these gaps. All right, but if you're trading in the currency market, you see less gap. Gap is pretty in a way pretty risky because let's say if you enter here, right, your stop loss is here, but when market gaps above your stop loss, you actually get out losing more than what you have planned and intended to do so. All right, so that's why when you're trading index, when you're trading stocks, it's actually more risky than FX, because you can't really fully control your risk, right? But if you look at this pair, this one itself, price is currently back at where the completion of the bad pattern is. All right, so just what questions will you want to clarify regarding this? My suggestion to you is keep away from commodities and index as of now. All right. When you first started off, the best part to do is just focus on currency, and because there's a lot of opportunities in the currency market already, you really don't need to venture into other kinds of financial assets as of now, because you just started. The one thing you want to do is just focus on a few currency pairs. Practice on the skill set, practice on the risk management, practice on your psychology, and then when you move on, that's where you get familiar with it. Then you can easily expand and adopt. Can you still short? If you ask me, yes, you actually can still short. Technical wise, all right. Okay, basically German index. We don't have fundamental data. We don't have sentiment data to it. But if you look at technical wise, you can still short. All right. Why is because currently over here, it's actually forming a double top. Okay. Price haven't broke the previous high, and if you look at RSI, it's actually overbought. All right. So over here is overbought already, and it's coming down. All right, but for me, how I'm going to trade this is, if let's say I'm looking at this on this time frame, I'll actually drop it down to, let's say, lower time frame. I'll wait for a double top to actually form. All right, so currently here we do have a double top already. All right, so I won't short now, but what I'll do is I'll wait for price to actually go lower. Okay, and then after that it comes back up, and if I see a rejection from this level again, then I'll short it over here. Okay, that's how I'm going to do it if I'm going to trade it like this. I won't be trading it right off as of now. All right, and again, just to clarify, right, we don't really trade the index. So when we share with you all this setup in the index, right, it's basically just to share with you. When we do our own trading, the most we trade is actually just commodities pair. All right, so we don't trade German. Sorry, we don't trade German DAX. We don't trade S&P. We just analyze them. That's it. Okay, so if you ask me, still valid, it's still valid because it haven't breached the top yet. So this trade is still valid. All right. But again, you need to be clear as to why are you trading DAX lah. All right. So if you are not familiar with this asset class, then better not to touch it. Okay. Any other questions you want to go over with? All right. Let me just bring you to the VIX. Oh, VIX. Okay, VIX is interesting. All right. JT talked a little bit, I think, just now when he said that he's also trading this. VIX is interesting because if you look at it, right, it's currently trading below 12, and it's really all-time low. All right. If you look at this for the past 1 year, 2016, it's really all-time low. All right. So this is telling you that people are it's really a risk-on environment, and then that's why you are seeing Aussie are still rallying even after or RBA cuts its rate. All the stocks market are still rallying. All right, if you look at S&P, it's all-time high. If you look at German DAX, all right, it's also rallying. All right, it's still rallying. If you look at Nikkei, not okay. Nikkei is affected slightly because of Japanese yen, right? But even Hang Seng itself is rallying. All right, so with VIX itself, you can with together with equities, I think this one is a quick recap. All right, to look at risk environment, you simply look at few things. You look at the overall equities market, are they rallying or are they falling? All right, if most of the equities market are actually rallying, is telling you is pretty on the risk on environment. The next thing you can look out for is look at VIX, all right, volatility index. If it's below 20, generally it's a risk on environment. All right, and then of course you can also look at bonds, etc. Okay, but we don't have much access to those information, but simply in terms of equities market as well as the VIX. Okay, so as long as that, then you know that what you need to look out for. If you look at Aussie, right, Aussie is still continue rallying as of today. All right, H1, you can see today is still rallying in terms of Aussie. All right, so all these are being explained because of risk-on environment. Traders and investors are going for higher yield currencies, and that's your Aussie and Kiwi itself. All right, just a quick look at Kiwi. All right, Kiwi is falling because of, oh, this is pretty interesting. All right, we have a potential divergence setting up over here, but you wouldn't want to be trading this because of RBNZ coming in on Thursday, right? So just keep an eye on this pair itself. All right, we do have a head and shoulder as well for those who are trading price patterns. All right, we don't trade all those, but we are just simply aware of all these price patterns that is available if you want to trade them. Okay, head and shoulder, break of neckline, retest, that's where you trade it. Okay, any other questions? If not, we can end this webinar over here. I'll record a video on supply and demand, and then once it's up, I'll let you guys know, and then you watch that video, and you have further questions, you can just ask me and clarify with us regarding that. Okay, if it's all good, I'll see you this Friday. Okay, I'll see you this Friday. I'll drop you guys a confirmation as to what time and where we are meeting. It'll be a casual one. All right, so just come out and chill and relax. All right, with that, we'll end this webinar, and I'll see you guys this coming Friday.